Welcome, everyone, to Your Financial House. Once again, thanks for giving us your time and thank you for all your support over the different Saturdays that we have been here. We want to welcome once again Miss Trudy, who has been sharing her knowledge with us on everything when it comes to your financial house. So, last week, ladies and gentlemen, we did um, a topic called life insurance.
That's right.
We like to call it income protection. So
Yes.
we're going to continue on that topic of life insurance or income protection, however you want to call it. And we just want to go through a little bit of what we went through last week. Why
hmm
is it important to have life insurance or income protection? And what are the benefits of that? So I will tune in and hand you on to Miss Trudy, who has been doing an amazing job Saturday to Saturday to Saturday to Saturday.
Thank you so much, Avril. And it's just good to be able to share the screen with you and have a familiar face so that we can share this information with these people. Yeah. All right.
All right.
So,
So Miss Judy Shohoff will tell us more about life insurance.
okay, perfect. So,
Yeah.
I mean, we were continuing from our conversation from last week, and in discussing and talking with other people outside there, a lot of people, when you talk to them about life insurance, as you know, they don't want to hear about it, right? And what you find it's more of a mindset thing, because no one wants to think about death. No one wants to think about the life after, when they're not there with their loved ones and so forth. And we get that. It's the same for us as well, right? We feel the same way. But the importance of it, as I stressed last week as well, and I'm going to stress again this week, is
Mhm.
that it allows us to be able to ensure that our family is financially secure, right? To a point. So things that we would have been planning, while going through the motions, and then suddenly we're not there, these things can, to a point, still happen once you
That's right.
have that income protection in there. And I totally agree with you, Avril, from what you said at the beginning. Income protection is really the best term for it. Because, okay, like, let's talk about the home insurance and auto insurance, as we spoke about last time. With home
Yeah.
insurance, you have insurance there that if anything happens, your home is insured. And then you can actually buy another home, not the same home, but you can buy another home. The same thing with a car, right? It means that you don't have to go into your savings to buy a whole car. You have the insurance there that protects you from that, and so you can get another car as well.
Mhm.
With life insurance, and the term is used like that, but it's not like you have another life. All right. So that's why it's better to use the income protection, as you said. All right. So it actually puts the income back to your family that you can no longer bring towards your family anymore. And that's why income protection is such a better term, for it as well.
Okay.
And as usual, Avril, I have my slides. So I
Yeah.
am I'm going to pull that up,
Yeah.
for us right now as well. Okay.
All right.
So
I just want you, sorry, before you start, I just want you
absolutely.
to speak a little louder for us, please.
Sure.
And
Let me pull my
if
volume up.
anyone hearing us loud and clear, let us know. I see we have at least six persons on. So if you are on and you're hearing us, please put in the chat that you're hearing us so we could continue, ladies and gentlemen.
Yes, this is important information. We want to make sure that we're being heard.
That's right. That's
Yeah.
right.
All right.
Okay. All
So,
right.
as we spoke about last week about insurance, is it worth it? And and so forth. The next point is, which one is the right type of insurance for you? Before we go there, there's a couple things that I wanted to again go over that I think will help solidify the whole life insurance,
Yeah.
aspect. So the purpose of life insurance is that it helps to financially protect you and those you care about. So to protect those you care about after you've passed away prematurely. Okay, and so that's why it's always good to, when you start to work, you get life insurance in place, so that it will be able to protect your income and provide for those that you leave behind. It also allows you to help with their future, and even when you're not there anymore. And a big aspect of that is, especially if you have children involved and you want them to be able to go to university or to, seek other stuff, you need cash, you need income to be able to do that. And so by your having that in place, if anything happens, these things can still happen for them as well, right? And then of course it pays off any outstanding debt, not leaving a burden on your family, right? So if you have a mortgage and you prematurely die and you still have a mortgage there, your life insurance can cover this for them, and so your family can live in their home without having to pay a mortgage, right? So that is a total burden that's put off the remaining spouse, so that they and their family can live comfortably and they can focus on being able to deal with the process of not having you there anymore as well. Okay.
Well, I want to thank you for letting us know about this, because most times we don't get insurance unless we want to or unless we see the need for.
Yes.
So it's very important that you can bring that out and say, that we need life insurance. And life insurance is something that is needed for when you are gone. So it's replacing the income that you used to bring, because you're no longer there physically with your family. So it is important to have that life insurance in place, or that income protection in place.
Absolutely.
Letting us know that.
Yes. So, and again, I just want to bring up that point that we talked about with the car and the house insurance. We have those things. We get them in place. And as a result of that, is because these things are expensive and valuable assets, right? And it provides us with a financial cushion so that you don't use up your savings or go into huge debt as well. So if we are able to protect these things, we should also protect the biggest asset, which is our income, our being able to earn income, right? Without that income, we wouldn't be able to even buy the home and car insurance as well. So important to make sure that you're protecting your income as well.
That's amazing.
Yeah,
that's amazing information, Trudy.
Absolutely. So again, we looked at when you should buy life insurance. So anytime you have someone that depends on you financially. So if you have a young family that's coming up, you just, have kids that come into the equation, yes, make sure that you have life insurance, right? In order to not leave that financial burden on your loved ones, make sure that you have that in place. It covers for potential risk of losing earnings, especially in the middle point to the early years to midpoint in your life, when your career is now starting to build up. At that point, and that time you may be pulling in more income, and then suddenly that income is no longer there. Life insurance is definitely needed, right? And the best time to get it is the younger you are and your better physical shape that you're in. Make sure you have life insurance, because you'd find that later on it's going to get harder for an insurance company to want to cover you. Also, your premiums are going to go up as well. What you have to pay on a monthly basis is going to go up the older you are. All right. So those were some pretty major parts to remember.
Yeah.
So this is one thing that you said last week, Avril, and I thought it's so powerful that we needed to make sure that our audience are able to see this and that it resonate with them as well.
Yeah.
It's better to have it and never need it than to need it and not have it.
Yeah.
Right. And this is why you see so many GoFundMe programs going up as well. Help to be able to provide for finance the funeral expenses for my loved ones. And this is something, and it also means that sometimes having a life insurance, maybe just something small enough just to cover those expenses. That's all. So it doesn't fall on the burden of your loved ones. So definitely something to look into. And if you have any questions as to how much it's going to cost, reach out to us. We can, put that, get some information to you so you can figure that out as well.
Yeah.
Okay. So this is the new part of the whole discussion that we wanted to talk about. And this is going to take a little bit of time. I've tried to put it into a table format, so at least, you're able to see it and see the differences as well.
Yeah.
So
Yeah.
as we said, there are different types of life insurance, all right? And we're only going to be looking at 3 today as well. So you have the term life insurance, you have whole life insurance, and universal life insurance. Now, I want to categorize whole life and universal life because they're quite similar in that they both have a cash value aspect to both of those types of life insurance. Okay. As we go through in talking and chatting, I will be able to just give you the little bits as to why they may be a bit different. But essentially, they both have a cash value aspect.
Okay.
So one thing that's major for between the 3 of these is the cost between these life insurances. So term life has the lowest cost, all right, because you're just paying for that death benefit. That's what you're covering for there. All right. Whole life is sometimes 5 to 10 times more expensive, and the same as universal life. Okay, so what you often find is that you may be paying probably $25, $50 for a term life, depending on your age and your health. But then with whole life, you're going into hundreds, $200 of dollars that you have to pay on a monthly basis to be able to have this insurance. All right. The reason for that is because of the cash value aspect that they roll into this type of policy. And what that cash value aspect is doing is that it combines both insurance and savings together. That's what that insurance does. Okay. But we're going to get in a bit more as we go through the differences.
Yeah.
So as I said, there is an aspect of an investment. So with a term life, there's no option of investment with term life. Term life is just coverage for a certain term, a certain period of time, right? So with no option of investment, you then have an option to invest elsewhere, right? To find an investment elsewhere that suits your needs. Okay. With whole life, what this tries to do is it tries to combine both insurance and savings together, or investments together. And what it does is it locks you into a low return of investment, because that's what a lot of people don't realize. While the policy or the product, it puts those 2 items together, the return that you get on it is quite low. It's quite low. It averages between 1 to 1.5%. Okay. And it's interesting when you look through, or when an insurance agent comes and sits with you and they show you the illustration of this is what you can get on your whole life and your universal life, and the returns look huge. This is usually an exaggerated illustration. It is not, in fact, what really happens. Okay. And it's the same again for the universal life. The difference between the whole life and the universal life is that you can switch between how much you're putting towards your premium versus how much you're putting towards your investment. While with your whole life, it's fixed as to what happens. Okay. So I want to stress that part as well, because with the universal life and the whole life, you don't usually have a say in what your investments are going into. This is all decided for you. With term life, you are not investing at all. So you have that chance to do your own investing on the side, outside of this product.
Okay.
All right. Another huge part is the death benefit with the term life and the whole life and the universal life. With the term life, you get what you pay for, right? You are paying for a death benefit that if anything happens to you, to your beneficiary, to your loved ones, they get exactly what you're paying for as well. All right. And usually with term life, it's one payment that you make throughout the term of the policy, right? But if anything happens to you, you get that payment. With the whole life, you pay for 2, but you get 1, right? And I'm going to stress and talk a bit more into this. Remember what we said before, you have the investment aspect and also the death benefit aspect of it, right? But what happens is that if anything happens to you, if, for example, you've passed prematurely, your family will get the death benefit. So your question is going to be, Avril, what happens to the cash value?
You read my mind too well, girl.
Exactly. Where does it go?
Yeah.
All right. It goes back to the insurance company. It goes back to them. All right. And I think that's going to come to a shock for some people, where they thought that they get both, but you get one. You only get one.
Well, I must say, Trudy, this is an eye opener because I remember, in the Caribbean, I think we either have whole life or universal life, right? I never heard the term life insurance until I came here to Canada. And with whole life, as you explain, you get in 2 for the price of 1, meaning that you have your policy, so you have the cash value and you have your investment. And when that is done, when the person is gone, you only get in 1.
That's right. I want to correct you there, Avril. You're not getting you're not getting 2 for the price of 1. You're right. You're paying for two things, but you only get one thing. You get one thing. And that's what's hard about paying that amount of money, 5 to 10 times more when you only get one thing in the end.
Okay. Right? I'm so happy that you can break this down.
Yes, absolutely. It's good to clear it up. So the other side of it is, say, for example, you decide that you want to take out the cash. All right, before, and you can take the cash out even before it actually matures as well. You actually, and I'm going to go into as well, you actually borrow your own cash at that aspect. But I'm gonna let's move a little further and you'll see it how it looks like.
Okay.
All right. So you pay for 2 things, but you only get 1. So it's either you get the cash aspect or the death benefit. You don't get both. You don't get both. Okay. And it's the same thing with universal life as well. It's the same thing. All right. So the cash value aspect.
Yeah.
There's no cash value in term life. And again, that gives you the opportunity to build your own savings elsewhere. So it's kept separate. Okay. With whole life, there's no cash value for the first few years, right? Sometimes up to 5 years. If you're checking your balance and checking your life policy, you're thinking that 5 to 10 times premium that you're paying, some of it is going into your cash value, your cash savings account, and then some to pay for your death benefit. But usually nothing is going in there until after 5 years. Why? Because of the fees that you're paying for with these policies, both the whole life and the universal. It's the same situation. Okay. So for the first 5 years, your cash value, if you decide to surrender your policy, and you say, okay, so how much money do I have coming back to me? It's usually 0.
So
it goes towards paying the insurance agents who sold you and the insurance companies at that point in time, right? So you have that aspect where the most of the money is not even earning any interest, because there's no money to earn any interest until 5 years after, right? And then say you've waited 10 years and you built up a cash value amount on your insurance, all right? For you to access, because some people say it's my money, I should be able to access it. For you to access that money, you have to borrow your money. You have to pay interest to borrow on that money as well. Okay. So with these things and hearing these things, it makes sense to have these things separate. because it means that if I have my own money, I could borrow it when I want to without paying anybody interest. That's one
Yeah.
aspect, right? And you can stipulate where you want your monies invested. With these, you often don't have a choice. You're at their mercy as to where they're invested as well, right? Because of course, the insurance companies have to make a profit as well.
Yeah.
Because they have to pay the policies. So they want to make sure that they're earning interest as well. So them being able to charge you for borrowing your own money is a way of them doing that too. Right. And this is why you find life insurance is so misunderstood. A lot of
Yeah.
people don't understand the concept, and especially when you look at whole life and universal life, it gets so much more complicated. And that's why some people get caught out, right? Because they believe that if someone sits down and is coming to sell this for me, this has to be something good.
Yeah.
But often it is the wrong fit. It is the wrong fit.
I just wanted to say, Trudy, this is amazing information, right? If someone is coming to sell you whole life, universal life, you trust that person to
That's
begin
true.
with,
That's
you know,
true.
to sell you the best, because you have already put your trust in that person. So you figure out that, yes, they're going to sell me the best policy ever.
Yes.
You know, so you've already put your trust in that person. So you're expecting, I would say,
To get the
to
best
get the
thing.
best of it.
That's
Yeah.
why feeding your family. Yeah.
Yeah. Especially if it is a friend that you've known or somebody that was referred by a friend, you know, just like we refer the best restaurant that we went to, blah, blah, blah. Somebody
Yeah.
comes and they do the same thing with the life insurance as well.
Yeah. Yeah.
So this is a real eye opener. I will not stop saying that because
it
it's
makes
just
you
all that
think.
information is.
It's huge, and it's
Yeah.
always a question to ask anyone who comes across comes to your door, reaches out to you about life insurance, and they're offering you the whole life and universal life. It's good to ask them, what type of life insurance do you have? Ask them what type do they have, and that should kind of send you in the right direction as well, right? So yes, these are such important points for people to be aware of, so that as I said, who should know more about your money than you? Right? So just taking the word of somebody who comes to your door and tells you about life insurance and so forth, and this, putting it into the savings as well, you don't even have to worry about the investment, because we'll take care of that as well for you. That should be like a ding, ding, ding. Something's wrong there. Right? I need to be able to know where my money is being invested.
Yeah.
So that's a huge point. So again, just to finish off the whole thing, it's beneficial to keep your insurance and your savings separate, because you can keep an eye on your savings as well. That's one aspect of it. You can have your own risk as to where you want it invested. You can change your investments because it's kept separate as well. And that's a big deal. The other powerful thing is that you get two. You pay for two, you get two if you keep it separate, if you don't have it in a whole life or universal life, right? Because with term life, you have insurance. With your savings or your investment, you have your savings. So that if anything happens to you, your family has the potential of getting both, right? However, with whole life or universal life, only one thing. Only one thing. All right. You choose your returns, and I said, as a risk, and you have access to your own funds, and you don't have to borrow it because it's your own funds.
It's your own money.
That's right. Right. So I know that, as we said at the beginning, life insurance, nobody likes to talk about it. Nobody does, right? Because it's in an eventuality, it means the end. And yes, but the potential of it is big. So again, is life insurance worth it? Yes. Yes, it is. Right? If life is going to, you think about how your family would manage if you're no longer there. Right? Imagine how life is going to be for your spouse, for your children, with your outstanding debts, who's going to take care of that, your final expenses. Because a lot of people think that goes away when you die.
No.
they will go somewhere else to find it. That's right. They will check your estate and they will get the funds. So have it prepared. Get all of that sorted and have it sorted so that the family can take care of it if you're no longer there.
Yeah.
Right? So as I said, it is a love letter to your remaining ones. That's what life insurance is. But make sure you have the right type of life insurance. I can't stress that enough. And if you want more information on figuring out possibly what you have right now to see if this suits you or if it's the right life insurance, because sometimes you may not be able to tell outright if it's a whole life or universal life, let's sit down and chat. Bring your policy, let's go it over together and we can discuss it together with you.
Mm-hmm.
Yeah, so that's it for today, Avril. It's heavy stuff, life and death stuff, but it needed to be discussed. Absolutely.
Yeah, it's not, like I said, it's not sexy.
No.
Life insurance, a lot of people will not want to talk about it, especially because this is personal. This is something that they would not want to put out there to say, right? But as you mentioned earlier, it is important to have life insurance or income protection, and it is to know what you're getting when you're buying life insurance. That is the most important thing too. And obviously, the person who is coming to sell you that policy, ask them, what type of policy they have, which one do they have, because you cannot be selling a product out there to persons where you yourself is not or doesn't even have that product yourself, right?
That's true. That's so true. Yeah, and that exactly as we said, it is powerful because the things that we've been talking about on the lives and when we come every Saturday, these are things that we are doing ourselves as well because we know the truth in it, right?
Mm-hmm.
We practice it and we know that these things work, right? So it's so important for people to check things out, ask questions. It's sometimes asking one or two questions can make a difference, right? And it sets you kind of straight. All right, if this person doesn't have it, then yeah, something's off.
There's an alarm going off.
That's right.
Well, thank you so much, Trudy, for your time and your presentation about life insurance and the types of life insurance that we have. So, ladies and gentlemen, this is our financial house this Saturday. And if you have any questions, please put it in the chat so we can answer your questions. And if we don't know the answer, we'll find out the answer for you because this is what we do. And your financial house is very important. Who should know more about your money other than you? Not the bank, not the brokers. You should know more about your money. So this is your financial house. Once again, we want to thank you for being here with us, taking your Saturday, your 30 minutes to spend with us. We are hoping that all this information that we have shared over the past, maybe this is our 10th Saturday or more than that.
It may be just eighth Saturday, but it's been going by.
We're hoping that you guys can share this information with a friend, with family, and just to let persons know, what they have when it comes to when it comes to not just your financial house, but the different products that are out there. For example, life insurance, what policy do they have? Do they have a term life insurance? Do they have a universal life insurance? Do they have a whole life insurance? So these are things that we really want to put out there in your minds for you to find out, what I have, what is best for me. Do I have the right life insurance or not? And we are here to help. So Trudy has taken time off Saturday after Saturday to be here with us. I want to thank her for her knowledge, her experience to bring value to your financial house every Saturday. Trudy, I want to say thank you.
Oh, you're so absolutely welcome, Avril. It is a pleasure every time. It is a pleasure.
And tell persons where you are and how they can get in touch with you.
Yes, for sure.
Mhm.
So again, through Facebook, you can through this chat, you can make your comments, and we'll be able to reach out to you. You can send me a private message on Facebook. And again, both Avril and I, we have our emails just on the screen right now, so that you
Yeah.
can send out emails directly to us if you want it a bit more private, so that we can reach out to you and see how we can assist you, because we would love to get you in that right place so that you are comfortable, or at least moving in the right direction to be more comfortable with your finances.
Yeah. Thank you once again, Trudy. Thank you so, so much.
Thank you. All right.
Thank you, ladies and gentlemen. Once again, we ask that if you're here next Saturday, I think we will be continuing on the same topic, which is life insurance. And if you know someone who probably have questions and needs some more clarity, somebody who needs more information, invite them to those sessions and let them know that this is free and this is something that we're willing to do to help persons gain their financial house stability.
That's right.
Okay. All right. Once again, ladies and gentlemen, thank you so much. And we will say good evening, well, good afternoon until we meet again next Saturday.
See you.
Thank you, everyone. Bye.
Bye-bye.